Hey everybody, Smart Silver Stacker here. Hope you're doing well. Welcome to the live stream. The US Mint has been forced to sharply revise its prices upward for silver bullion products as we progress through what's really developing into a supply squeeze in silver. Silver's on a real rip, right? Silver's up 147%. This is a chart, by the way, of the annual performance of silver. So each one of these candles is 1 year. Silver's up 147% last year. It's up 25% and change thus far in 2026. It's January 17th. So, the silver price is doing just incredible stuff. And in today's live stream, I want to revisit some of the factors that are contributing to this rise, kind of give you an update. And also, if you're new to this whole silver thing, you might be wondering, why is silver soaring the way it is? Well, we're going to get into that, and we'll talk about the US Mint as well. And if you'd like to get your hands on some silver as prices continue soaring, and I'm going to make the case here in today's video why we're likely headed to $120 an ounce in the near future, then make sure you check this out. Introducing the first ever 5-ounce silver maple leaf coin from the Royal Canadian Mint, a historic release with an iconic design that is available in a stunning 5-ounce format for the first time ever. Don't miss your chance to own a piece of minting history, available exclusively at sdbullion.com. All right, so you can check out that 5-ounce Canadian maple leaf over at SD Bullion. Let's just start with this chart, and then we'll get to the US Mint in just a moment, because it's a brief update, but the pricing is pretty ridiculous, and I'll tell you what I think it means. But let's just start with this chart, because this is the long-term chart, and this is the one that really sets us up from a technical standpoint for the silver price going much higher. So I'm trying to center this on the screen here, and what you're looking at is a massive cup and handle pattern that goes all the way back to 1980. And we've covered this many times, so don't worry, I'm not going to stay on this too long, but it bears repeating. It's a huge cup and handle, very bullish pattern. The handle itself is a small fractal of that cup and handle, and we just broke out of this last year, and that explains why the price has been absolutely blasting off ever since. If we switch this to a 3-month view, you can see that it was really, it's been a good entire year, year over year, it's doing pretty well. But it was really that last quarter after we broke out above the breakout level of this chart that the silver price really started to accelerate to the upside. And you can see that momentum is continuing right now. Now, if you look at this chart, there's kind of two ways, I guess, you could derive a price target. You want to look at the difference between the bottom of this cup and the breakout level. Breakout level is about $50. Bottom is around $3.50. So that's $46.50. So you can add that to the breakout level, and that gets you a price level of maybe $96. So, we're almost there. Is silver topping out here? Well, think about this. This chart goes back more than 40 years. It's a 4-decade base building pattern in silver, where silver has been undervalued. It's been ridiculously valued to the point now that we have these significant supply deficits every year because miners just haven't been incentivized to produce this stuff. And the applications for silver, which we're going to talk about a little bit later on in this live stream, some of the somewhat novel applications and the ones that are contributing to the supply deficits, you have this situation where you've got dwindling supply, and now maybe we're getting some real price discovery with this sort of repricing of silver. And the other way that you might get that price target, so if you look at this like on an arithmetic chart, which means it's not adjusted for percentage terms, so it's like every block up of $10 is the same size, then yeah, you would say we're reaching sort of the apex of this price run. But if you look at it on a log scale, which I think personally, it's not financial advice, I'm not telling anybody what to do, but when I look at this, I think that the logarithmic form where it's based on percentage gains, not absolute nominal gains, then if you extrapolate the bottom to the top here in terms of percentage terms, then we're just getting started, right? So the percentage move from 3.5 to 50, if you put that same kind of a move on top of 50, that gets you up into, I think, if anybody out there is a math whiz, you can do the math for me, but it gets you into the high triple digits. And, it's not an exact science. It's just an idea of how much this could run. So it could get you to, again, the high triple digits if that's the case. If you think about this, look how the increases in price are increasing on this logarithmic chart. So the move from 50 to 90 is much smaller than the move from 50 to 0, right? That's how logarithmic charts work. So if you extrapolate a price target that way, you're talking about a run that could go on for years and take us into the high triple digits, like $700, $800, $900. So I don't think we're done yet. And let's look at the mint, and then we'll come back and look at this chart again, because I want to look at some of the more recent price action. We'll switch this to a one-day chart, and we'll kind of talk about how the week wrapped up for silver and what's going on there. But let's just digress for a moment here and take a look at what's going on over at the U.S. Mint. So they put out that notice during the week. I had covered that about how they had halted all of their bullion sales, and they were pulling the Eagle sales because of the developments in the silver market and the threat to availability, the rapid price movements, etc. And look what they did. They're selling these Eagles now for $169, $173 if you want the proof. 2024 1 ounce silver coin it's a proof from San Francisco, $173. Pricing on gold is also going up. Look at this. You got a gold proof coin, $54.40. What's the spot price of gold at right now? It's like $4,600 or slightly below that. So the premiums over at the U.S. Mint are skyrocketing. Quick aside, if you want to get a proof coin, I can't tell you what to do, but I wouldn't buy one here on the Mint, even if it is West Point Mint proof from 2025, because you can get them over at SD Bullion, a random year proof with a box and all the stuff. I'm not that into proof coins, but I guess when it's only $300 over spot, that's not bad. You can get one for $49.07 over at SD Bullion. So, that's a better deal. So shop around. I don't think I would buy any of this silver on the Mint personally for these prices, but it's pretty interesting. It's like makes you wonder, what do they know? And certainly theories have abounded regarding these, these very expensive bullion products over at the U.S. Mint since they've made this change. And I think there's a few things you can say here. One, I don't think that the website here is, really up to date in terms of the technology that's being used, because if it was, they could just have pricing that sort of, tracked to the spot price and it moved dynamically. But no, they've got to I wouldn't be surprised if they have to do these manually by hand, update the website. And this just, it's like going to the DMV, right? It's the government running something. So they don't have an incentive to, make this a good experience for customers. Presumably, they don't really have a profit motive because they're not a company, right? They're run by the government. Another thing you might think about is all of the sites, sorry to keep digressing to SD Bullion, but they've got this notice up here, right? Historic demand will cause processing, shipping, and phone call delays. We appreciate your patience. If you've been stacking some bullion recently, let me know in the comments or in the chat what your wait times are like right now. I hear that they're pretty long in most places. So maybe the Mint is just inundated with orders, and they don't want to, deal with the influx of orders. That could be a problem. If they're getting swamped, they can just say, let's just jack the price way up, and then we don't have to deal with this too much. So it could also be, of course, that they're aware that there is a supply issue, and they're trying to get ahead of that, right? And they're just trying to limit the sales because they know what they have is very finite and they don't want to run out of stock. So how do you do that? You raise the price, right? So I'm sure they're still selling some for $169, but probably a lot less than they were selling them for $90. Anyway, that's what's going on with the U.S. Mint. Let's go to the recent action in the daily chart of silver, and let's talk about what we have, because we had a big, quote-unquote pullback on Friday. Interesting, everybody was in a huff about the, pullback, the correction that we had on Friday. And, keep in mind that the correction was to like $88 and it finished actually above 90, right? Silver spot price at close above 90. But if you go to the week, I mean, that really filters out that noise, right? Remember that the week started, the silver price, the open, $80.69, and it closed at $90.07. So yeah, it did close off the highs. Earlier in the week, we touched a high of 93.50, but I'll take it. I'll take a move from $80 to $90 in the course of 1 week. But I think people get nervous because if you look at indicators like the RSI, the Relative Strength Index, they're very hot, and silver is very overextended past its 200-day moving average. So if you have like an exponential moving average, we can get rid of some of these trend lines here. We are very extended above it. So, people are just worried about correction. And I had drawn something like this on a recent live stream. I had gone to like a 4-hour, and I think we had a chart like this. And, we broke down below that on Friday. But sometimes when you're doing TA on this stuff, especially on these shorter time frame charts, you can kind of get a little flustered by the noise. And I think that's what I did because technically, when you zoom out back to the daily chart, it doesn't really look like any kind of a breakdown from a consolidation. It's just that, it's consolidating, which is like what silver does after it has a big run up. That's what we've witnessed time and time again in this bull market, like this triangle. And the daily time frame is probably really the correct time frame to draw these consolidations on to filter out some noise. So I suspect that we're going to break back out to the upside here. And I mentioned, the $120 price target. I think that's on the thumbnail, and, people like specific price targets, but I'm going to give you a very specific case for why we should get to $120 or thereabouts. Let's switch to this chart. Let me go to a 3-month view. Actually, let's go to 1 month, and we're going to look at the M2 to money supply, or the silver to M2 money supply ratio. I'm just trying to hide these other indicators. Okay, so we've looked at this chart in the past, but let's talk about what it means for the price target right now. So I think we're going to continue to run higher in silver. I mean, sure, it could consolidate, it could chop for a bit. It's very parabolic right now, basically. So it may need to cool off a little bit, but I think Q1, triple-digit silver is in the books. On the Shanghai Gold Exchange, it's already over $100. It hit $105 on the Shanghai Gold Exchange this week. So I think that Western prices are, going to follow suit very soon. And if you look at this chart, this is the silver price divided by the M2 money supply, and it gives you an idea of just how much currency debasement there has been over the decades. And it really, I think, gives you a better inflation-adjusted price target for silver than using something like, say, the CPI, because the CPI uses all sorts of tricks to, make inflation, to underrepresent inflation, to make inflation seem not so bad as it truly is. But when you just look at the volume of money creation, because remember, inflation, the real definition is the expansion of credit and the money supply. It's not rising prices. At least, it didn't say that in dictionaries 1971 and earlier, which is an interesting date because that's, when Richard Nixon took us off the gold standard. Actually, I don't know exactly what year they changed it, but it was sometime in the 70s. They changed the definition from being the expansion of the money supply to being rising prices, which is a subtle difference, but it's pretty important. So in order for silver to really be at the same price that it was in 2011 relative to the amount of currency here in the US, and you can see here's the 2011 low, we still need the silver price to rise significantly. And if you do the math, it means you need about $120 silver to get down here to the level that the M2 or the silver to M2 money supply ratio was back at the previous peak in 2011. And so $100 may give us some psychological resistance, like in the sense that it might pause there for a few days. Maybe there's a slight reaction off that level. Maybe we need to test $100 a few times, because $100 is psychologically important. You're going from double-digit silver to triple-digit silver for the first time in history. But I think that the real significant resistance that we'll encounter will be at $120. That doesn't mean that we're going to stop there, but I think it's a good intermediate price target, like maybe a good price target for this year, or maybe the first half of this year, because things are heating up here. The factors that are driving silver's bull market are they're not going anywhere, right? And we'll talk about some of those as we go through the live stream. And, by the way, thanks to everybody who's watching on the live stream. Do me a favor, click that subscribe button, smash the like button, share this with your friends. And, another thing to think about is the prior low from 1980. Silver hit $50 in 1980. And if you do the inflation-adjusted price target with the CPI, that gives you a price target a little bit north of $200. But if you look at silver relative to the amount of currency that's been created since 1980, you would need a silver price to get to, with the current levels of currency creation, you would need a silver price of around $700. Now, an important thing to think about here is when you're looking at the silver spot price to M2 money supply chart is to remember that they're still printing more money. So, right now, if we were to get to the 2011 low, you would need $120. But if they print a lot of money, then you would need a higher silver price to get down to this level. And, if you want to get down to the 1980 level, in today's dollars, you would need $700. But if, they say they double the money supply, then you need $1,400 silver price to get to the 1980 low. And, I guess that's a good time to transition into one of the factors that's driving this. So, look, if you're a long-time listener, a seasoned stacker, this isn't going to come as anything too new to you, but it's important in context of this chart. And we just got the most recent monthly Treasury statement from December, and you can see the deficit in December, okay, 145 billion, kind of small actually, but look at the cumulative fiscal year 2026 deficit, $602 billion. That's on top of $38.6 trillion. There's a lot of factors contributing to this. We just had Trump recommend a $1.5 trillion military budget. So that's going to increase those deficits. This is the Committee for a Responsible Federal Budget. They are saying that it would add $5.8 trillion to the debt, just this move over the course of a decade. Current defense budget, about $1 trillion. So, $500 billion a year. I believe Trump claims that tariffs will cover the difference, but I'm sorry, I'm a little skeptical of that. I mean, they're probably bringing in money, but probably not that much. This is the M2 money supply, which, as you can see, is at record highs. So this is the number that this is the denominator of the chart that we were looking at a moment ago. And, this is heading much higher because the Fed has returned to expanding their balance sheet in December. They just announced that they are printing money again, buying U.S. Treasuries. Expect that to accelerate this year. And so, this is just sort of a basic guide for how high we might get right now. $120, I think, is a good, again, intermediate target. But you can expect the ratio to continue to fall. I mean, from a technical standpoint, look at what it's done, right? You have this support that's held for 46 years, just breached and just plummeting through that. And so, these levels are in sight, and the way to get to those targets, again, is going to keep going higher the more and more currency they print. Now, I was on X the other day, so we're going to digress and talk a little bit about some of the factors that are contributing to that supply deficit. And this stood out to me. This was an interesting chart from Tavio Costa here from, let's see, Azoria Capital. Okay, they put this together. Nice. Source, Bloomberg. It's Indian silver imports. So, yeah, I mean, that ends at 2025 there. And you can see Indian silver imports are skyrocketing. So, this all ties together, right? You want to wonder, why is the U.S. Mint being forced, or choosing to, I guess they're not, no one's twisting their arm, they can price them at whatever they want. I think the only rule is they can't sell these bullion coins at a loss, but they're pricing them at $169. Maybe it's because they know there's a physical supply squeeze. It's part of why the price is soaring. It's part of why the premium in Shanghai is like $15 right now to Western spot price. It's because they are importing a huge amount. Now, why are they doing that? Well, part of it is likely monetary demand. They're sort of remonetizing silver in India right now. If you've been watching the channel, you're aware of that. They recently made silver a viable collateral for personal loans. That's important because that makes it seem like a monetary asset when it's good as collateral. Previously, it was just gold, so that's a step towards kind of remonetizing silver in the same way that gold is a monetary asset there. They also are allowing people to put silver-related products into their pension funds now, so it's a lot of demand. It's also industrial, right? I found this article over at pv-tech.org, India solar manufacturing takeoff, growth prospects at home and abroad. So India apparently has the third largest solar production globally. Their installed solar capacity has surged from 3 gigawatts in 2014 to 130 gigawatts in October 25. Now, I don't know if they're actually producing all of those solar panels that they're installing. It's kind of vague here with the way they're saying it. Maybe they're purchasing them, importing the solar panels. I'm not sure, but you do need a lot of silver to produce solar panels. This is where I wanted to do a bit of an update. So you might recall back in 2023, at the beginning of the year, we covered this article, but if you're new to the channel, you might not recall. So it was an article about how the University of New South Wales researchers were warning that the silver industry, or rather the solar industry, could exhaust much of the world's known silver reserves by 2050 or earlier. And this is the research paper. You could probably find that video where we covered it in depth, but you can also find it. It's called The Silver Learning Curve for Photovoltaics and Projected Silver Demand for Net Zero Emissions by 2050. The long and the short of it is that they discuss how silver thrifting has been a trend in the solar industry. They try to get by with more and more panels with less and less silver, but there are transitions to new solar technologies, actually, and I believe they mention them in this article. Yeah, here we go. This is a quote. The results show that the current rate of silver reduction in silver consumption is not sufficient to avoid increasing silver demand from the photovoltaic industry, and that the transition to high-efficiency technologies, including TOPCon and SHJ, could greatly increase silver demand, posing price and supply risk. So they were citing new solar technologies, new at the time. I guess they're, about 2 years old at this point, but how those were being introduced, and those high-efficiency solar panels, while they were more efficient, they actually demanded significantly larger amounts of physical silver going into them. So, the world is building a lot of solar. I keep conflating those two words. This is an article from Taiyang News, and I kind of blew the image up for you here. But this shows China's solar capacity. Now, if you think India's is impressive, they've gotten to 130 gigawatts. China has hit a terawatt. Now, these brighter red lines indicate how much they actually added to their solar. So 2024 was the blowout year, but 2025 still quite a bit, 197.8 gigawatts. Think about this. India's entire grid solar capacity is 130 gigawatts. Well, China in 2025 added 197.8 gigawatts. So more than the entire Indian grid has in solar capacity. China just knocks that out in 1 year. They did significantly more than that in 2024. So all of this uses a huge amount of silver. So what you're looking at is this scenario where there is rising demand for silver for a variety of reasons, right? There is monetary demand. there is industrial demand. The industrial demand is interesting too because, part of the deal with the paper markets in the West is that there's a huge amount of paper silver that is traded that is only settled in fiat currency, right? There's not enough physical metal underlying all of the contracts. And I don't know what the exact ratio it is. It fluctuates. You hear the number 300 to 1 cited a lot. I heard David Morgan, the silver guru, who's a smart guy and knows a lot about these markets. He said in that interview that ratio was somewhat less than that, and it does fluctuate from time to time. I think he said something like 10 to 1. But it doesn't really matter. That if it's 10 to 1, and everybody tries to get their silver, that means 9 out of 10 people aren't going to get it, right? So when industrial users, manufacturers who need this stuff to make solar panels, who need it to make cell phones, who need it to make semiconductors, who need it to make electric vehicles, who need it to make batteries, who need it to make, pretty much everything that makes the modern society function, because silver is the most useful industrial commodity with the exception of petroleum. It's got more applications than anything else. When they see the price moving like it is, when they see the potential for a supply squeeze, they don't really care what price they have to bid. They got to get their silver. The amount of silver that goes into a electric vehicle, it's tiny, right, in terms of the total value of the vehicle. So if the silver price goes up 10 times, and instead of having $100 worth of silver in your vehicle, you now have $1,000 worth of silver per vehicle, that just gets passed on to the consumer. No one cares. It's $1,000 extra on a vehicle that's costing tens of thousands of dollars or more. So the industrial users are going to get theirs, right? When retail investors in the West wake up and they realize that the Fed just started printing more money, even though the M2 money supply is already at a record high, although the silver price is tripling basically year over year, even though the gold price is over $4,600. When they realize that, this is bad news for the purchasing power of the dollar, then they're going to want to get their silver too, right? So the monetary demand is a thing. There's a lot of factors that are driving silver higher. And that's why I think that, hitting this target right here is like a no-brainer. We're going to hit that soon, I suspect. Nobody knows for sure, of course. It's not financial advice. I'm not telling you to go out there and buy a bunch of stuff with leverage, guaranteed we're going to hit $120. Nobody knows for sure. But I think probability-wise, it's a lot more likely that we hit at least that level this year and potentially higher. On that note, I want to just briefly kind of talk about all of the factors that we've covered on this channel over the past several years, because they're really starting to have the impact that, we kind of knew they were going to have. De-dollarization is one, right? You don't really hear that talked about a lot now. It's all about tariffs and that's sort of the trade-focused stories. But that whole de-dollarization trend of nations abandoning the dollar for bilateral trade, that's still going on. That never stopped. It's just been running quietly in the background, right? The whole dollar milkshake theory, I think, is starting to go out the window. And we're on the verge of a dollar devaluation. We talked about the debt. We talked about the deficit. You can't do that indefinitely without, the risk of a debasement of your currency. And it's there have been hundreds of fiat currencies throughout history, and every single one of them, with the exception of the US dollar, has gone the way of the dinosaurs, or it's been significantly debased from its original value. Even the US dollar has lost 97, 98% of its value since its inception. So, but they're going to get that last 2%. The Japanese bond yields, okay, we need to look at these on a shorter term. Yeah, those finished the week near record all-time highs. This is the yield on a Japanese 10-year. This is the yield on a Japanese 30-year. The Japanese are the number one holder of U.S. Treasuries. They've got $1.2 trillion in U.S. Treasuries. And they may be forced to dump their Treasuries to bail out their currency. They're seeing significant inflation there. They're seeing soaring bond yields. The central bank doesn't want to crank up rates. What can they do? They can sell treasuries to defend their currency and to take care of their inflation problem. That's going to be bad for us. I mean, there's all these factors, right, that could create a crisis in the metals market. And the signs are there. You don't have to be a genius to see the signs, to see the writing on the wall. And the thing is that, like, yeah, silver has gone up a lot, and there's all these top collars constantly. Now, look, I do occasionally call for a correction in silver, and I say, you know, this is something you should pay attention to. Nothing goes up in a straight line. But I've never said that we've hit the top, and I don't think we're anywhere near the top. I haven't sold a single ounce of physical silver myself, and I don't intend to anytime soon because, again, you know, you look at that chart that we looked at the beginning of the video, it's a 46-year base building pattern. It's not going to be over in 9 months. It's not going to be over in 1 year. It's going to continue for a while. And so, you know, keep an eye on all of these factors that are playing out before your eyes. The increased need for silver, the actual physical demand for real, actual metal, not paper contracts, the de-dollarization trend, the remonetization of hard assets, all of these things are going to contribute to skyrocketing silver prices over the course of the next decade. So, you know, if you're new to the party, maybe wait for a pullback, maybe don't. I mean, we kind of got one on Friday. I guess some people might have been able to buy. What was the low for silver on Friday? If you snagged the absolute low, it touched 86.87. And, you know, I think that's pretty much like as good as it's going to get. Now, could we correct tomorrow? Yeah, we could drop down to $50. I don't know. If we do, I'll back up the truck. I'll tell you what, I would love to get me some $50 silver. But I have a sneaking suspicion that $50 silver is, you know, a thing of the past. And those days are over. I think what we're going to see now is more consolidation, more sideways chop. And then we'll get another move higher. And, you know, the conditions around the world, if China does something to interrupt supply chains, that could have a big impact. Part of the reason that we kind of got this choppiness, too, is the whole geopolitical thing. You know, there was threats of Iran strikes, and you saw the price soaring up on Wednesday to $93, and then the president widely kind of walked those back. Looked like cooler heads prevailed, at least in the short term. None of that is over, right? Sadly, I mean, I don't mean to laugh at that. It's a serious matter, and it's, you know, it's sad that things are the way they are. But I don't, for a minute, believe that we're all going to hold hands and sing Kumbaya. I mean, all signs point to the contrary. That's why we got a $1.5 trillion defense budget coming. So what this really is a sign that silver is viewed as a safe haven asset. And increasingly so as silver moves higher. You know, it's interesting. You might hear people talk about these things like, what is it, a Giffen good, I think in economics is like an item that as prices rise, you have to actually buy more of it. I don't think silver quite fits the bill because for something to really be a Giffen good, it kind of needs to be like a necessity of life. Although you could argue perhaps that money is a necessity of modern life to function in the economy. And so if, you know, the fiat currency is not behaving as, you know, a good money, then maybe you might say it's a necessity, but it doesn't really fit the bill for a Giffen good. There's also things called Veblen goods, which you can look up if you're curious. Those are like luxury items that you sell more of them as the price goes up. But silver doesn't really quite fit that bill either. But I do think what people are realizing is that this run-up in silver is, you know, it's probably not going to stop. And the physical supply is going to be more and more reflective of that. And I do think that when people start realizing that they're having a hard time getting silver, like it's the proverbial unobtainium, that is going to increase people's desire to get it, sort of in an interesting way, sort of contrary to normal supply and demand. And, you know, maybe eventually it will enter like a mania phase, but I don't think we're there yet. You know, you might argue that this is going exponential, but exponential curves can go, you know, they can go on for a while. And I don't think we're anywhere near the top just yet, especially when you, you know, talk about the silver price in the context of everything we discussed in this live stream. So thanks for watching, everybody. Don't forget to subscribe to the channel. Thanks for watching. Click down below. There's links. You can sign up for my free e-newsletter. You can follow me on X at x.com/stacksmarter. Please do me a favor. Let's get those numbers up. If you got any value here out of this live stream, you're still here at the end, then please do that. Appreciate everybody who tunes in for these. Enjoy the rest of your weekend, everybody. Stay safe and happy stacking, and I will catch you next time. Smart Silver Stack.